The Federal Reserve raised its benchmark interest rate by another 3/4 of a point. That key rate is now 4%, which will mean another increase in the cost of borrowing, including rates for credit cards, mortgages, and auto loans. That's the highest rate in 17 years. Fed Chairman Jerome Powell said he's still working to slow the inflation while avoiding a recession. This is the fourth consecutive 3/4 point interest rate hike, and the Fed suggests it may not be the last. Joining us now for more insight is Chris Markowski, who's the president of Markowski Investments and the host of the Watchdog on Wall Street podcast. Chris, good morning. Let's get right to it. I don't know about this soft landing because I don't know if you can actually cool inflation without lessening demand, and then companies will have to start laying people off, and layoffs means we're in a recession, right?
Yeah, that's one of the theories, and one of the ways that you can basically heat off inflation is you have to wreck the economy, so to speak. You have to put people out of work. You have to force the closure of small businesses. You have to have a retrenchment when it comes to home purchases. I'm not a big believer in that, especially when I feel that a lot of this inflation right now has to do with input costs and has to do with energy and the fact that we're paying so much at the pump, which is translating into everything that we do. So again, we seem to be on this hamster wheel, if you will, that we keep running on with 75 basis point hikes again and again and again and again and again. And the Fed comes out yesterday and says it's still not working, so let's do more of it. So I file that under the definition of insanity.
Well, you know, and here's the thing. Now, things are too expensive, and maybe some things are beginning to slow down. So what you're saying is on the supply side of things, if things get back to normal, some of the inflation will come down without these restrictive interest rate cuts. I think a lot of people have been saying that. Is there room for the Fed to change course?
Oh, absolutely. And I think that they gave a little bit of wiggle room yesterday. They've been behind the eight ball from the beginning, back when they were saying that inflation was transitory. And meanwhile, you and I and everybody else are looking at our grocery bills and our gasoline bills and our home heating bills, and they're going through the roof. They're like, what do you mean this is transitory? This is just going to go away? No, if they had started earlier by slowly raising interest rates, a quarter basis point here and there, we would have been in a much better position. Actually, inflation also is a monetary issue, too, when you've got too much money that's floating around. That's been dealt with to some degree, and it's still being dealt with the Fed is basically, basically shrinking the size of its balance sheet. Which has been very, very helpful. And that's done a lot so far. Most certainly the money supply has shrunk.
So, Chris, a lot of people after the pandemic, they wanted to travel. They felt as if they had missed out on 2 years of doing a lot of things, from going out to restaurants to whatever, and they're spending money. Is there any way to tamp that down without, again, going into a recession?
Well, the travel area of the economy is still doing very, very well. You go to an airport now, it's packed. I mean, flights are full where you go. That hasn't changed. There's a shift overall in the way that consumers are spending money. And then you're starting to see that in the earnings of various different companies, where people are spending more money on flights, and they're spending more money on hotels and experiences rather than stuff. When everybody was stuck at home, you know what, I got to get myself a new outdoor sitting set, or I'm tired of looking at this same living room, and they're buying those types of goods. So, yes, there has been a shift.
Chris, we have less than a minute left. I want a quick answer on this, and that is market volatility. There seems to be some optimism every other day, every other 2 days. We have a tank, then we come back. What's the market going to do?
Again, I would expect more volatility, more of the same moving forward. And again, I know it's difficult for many people to watch, and this has kind of been a brutal year, so to speak, when it comes to the overall indices. And again, I think it's going to continue to be the same way moving forward. But if you own quality companies and fundamentally sound companies, and you're dollar cost averaging every single month, and you've got a long-term time frame, you're going to be just fine.
Chris Markowski, host of the Watchdog on Wall Street podcast. Thanks for joining us, Chris.
Pleasure. Thank you.